Hey, it's Nick here, and you're in the Transparent FX Academy. I'm a top author on TradingView, and it's time to make another full market breakdown to see exactly what kind of opportunities we can be looking for on the period that we will be analyzing both from a technical and an order flow perspective. So without further ado, let's jump onto the charts. Okay, so the pair that I will be speaking about in today's video, or better said, the commodity that I will be speaking about in today's video will be US oil. Now, the reason for which I decided to speak specifically about US oil is because next week, this market has the opportunity to providing to us a good trade, because there are a lot of things that are starting to line up on it. So what I want to do is give you guys a full breakdown of it to show you guys where the opportunity is and obviously how we can be looking to capitalize on it. Now, as usual, I will be keeping this analysis as educational as possible. So first, I will be speaking about the technical aspect of this market. We will then go and see what we have from an order flow perspective with the commitment of traders. And by the end of the video, by using the combination of these two different types of analysis, we will be able to understand where are the best probabilities. Now, starting here from the monthly time frame, what do we have? Now, here in the monthly, we have a market which has just provided this nice W formation. Now, generally speaking, after the market creates a W formation, what you want to see is the market create a move to the downside to go and complete the W formation at the previous resistance, which is now turned support. So here in the monthly, since we have this massive W formation here, what we can expect is for the market to want to go and complete this W formation at the neckline, which in this case is this previous resistance here, which is now turned support at this level. So here in the monthly, we actually have an extremely strong monthly structure here. This is a historical structure level for US oil because it was acting as support here, against support here, now turn resistance, and now that the market has broken again above, it is again support. And this is a historical structure level, which in this specific situation is the neckline of the W formation that we have already identified, to which we do expect the market to provide a retracement too. Now, another important thing to notice is that here on the monthly time frame, what we have is the creation of a nice impulse. Now, generally speaking, after the market creates an impulse, you want to see the market provide the correction. And if you want to measure the potential correction, what you have to do is take your Fibonacci on the impulse. So in this case, you have to take your Fibonacci from this low to this high, which is the impulse leg itself. And what we can see is that the first Fibonacci retracement level, which is the 0.382, is lining up exactly at this area, which is the zone to which you do expect the market to provide a retracement to before the possible continuation to the upside. So here on the monthly time frame, we again expect the market to provide a retracement at least to this area, but overall to complete the pattern at the neckline. Going down on the weekly time frame, what do we have? Now here on the weekly, we consider the market has just provided a nice impulse correction and impulse pattern to the upside. Now, generally speaking, after a market completes an impulse correction and impulse, what you expect is for the market to provide another correction, as I have already shown you on the monthly time frame. So here, what we expect on the weekly is for the market to provide to us a nice move to the downside to again provide a retracement, since on the monthly time frame, we have already seen that we expect the market to give us a move to the downside. Now, if we look at the structure here that we have on the weekly time frame, we can see that the last time that the market went to the downside before starting the move to the upside is exactly from this level here, meaning that this zone is a very strong area of previous resistance, which is now turned support, to which we can expect the market to provide a retracement to before creating the continuation to the upside. So here on the weekly, we expect the market to provide a nice move to the downside. Going down on the daily time frame, what do we have? Now here on the daily time frame, we have some quite interesting structure and patterns. In fact, here on the daily, we consider the market has just provided this overextended W formation. Now, generally speaking, after an overextended W formation, what you want to see is the market provide a retracement. Specifically, you would like to see the market provide a retracement at least to the 0.32 of the Fibonacci taken on the impulse leg, in this case, from this low to this high. So also here on the daily, we are overextended to the upside and in need of a retracement. So monthly, weekly, and daily are all showing a price action and structure that indicates for a possible move to the downside on US oil. Now, if we go and see what we have from a COT perspective on the CAD, and if you're asking yourself, why are we checking the COT data for the CAD? We're checking the COT data for the CAD because most of the times we have correlation between what is happening on US oil and what is happening on the CAD, specifically USD CAD. But as you know, all currencies on the spot are traded against the USD. So you want to be checking the data for the CAD, which is actually CAD USD. So USD CAD is simply reversed if you want to have some insight on the next potential moves for US oil when it comes to the COT data and the institutional order flow. So if we check here what is going on the CAD, we can see that overall net positions have first decreased in the short term, then with the last report a little bit increased with 10k longs getting added on the CAD from an institutional perspective. However, if we look at the long term, we can see that we went from having minus 21.2k in net positions all the way up to having 13.7k net positions. So we had an increase of the net positions in the long term, however, a decrease of the net positions in the short term on USD CAD, specifically actually CAD USD. So obviously everything is reversed for USD CAD. So here in US oil, we can definitely expect the market to provide to us a nice retracement at least to the 0.32 of the Fibonacci taken on this daily impulse. But overall, as we have already seen from a monthly and weekly perspective, there is the possibility to see even a deeper correction. So how we will be approaching this kind of opportunity and situation with students. Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes are the best timeframes for the direction of the market. But when it comes to confirmations and entries, the best timeframe is the 4 hours. So with students, what we will be doing is monitoring price action from a 4-hour perspective during this move to the upside. And we will be waiting for the market to shift from a 4-hour bullish market as we have right now to a 4-hour bearish market. And as soon as the market will shift from a 4-hour bullish to a 4-hour bearish market, at that point, we will be adding US oil to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities at that point for the move to the downside and for the market to provide a retracement at least to the 0.32 of the Fibonacci taken on the daily impulse and overall even potentially a deeper retracement. If you made it this far in the video, it would be great if you can smash that like button and comment below. It really does support the channel and support the creation of more free education and analysis for all of you. But this is just the tip of the iceberg. I have a full mentorship program that will teach you exactly the rules of my rule-based strategies and also give you every single day a new market breakdown in which I show you exactly how to apply the strategies with entries, stops, and take profits, as well as answering every question that you have every single day, including the weekends. So it's a very complete program. It will teach you everything that you need to trade the market consistently. So I will see you in it. The link is in the description, or I will see you in the next video.